Did you know that in the past 10 years, some of the best performing stocks were companies that most people had never heard of when they were at their lowest? It's true. For example, stocks like Apple, Amazon, and even Netflix were once undervalued, with prices that didn't reflect their true potential. Early investors who spotted these opportunities made life-changing returns. Here's a shocking fact: almost 80% of people who invest in the stock market don't know how to spot undervalued stocks. That's a huge missed opportunity. But don't worry, that's where value investing comes in. It's a strategy that helps you find the hidden gems, the companies with huge potential that others might overlook. In this video, I'll show you how to start value investing in 2025, even if you're a total beginner. We'll go over strategies that professionals use, how to spot undervalued stocks, and common mistakes to avoid. Plus, I'll share some real-life examples of how patience and smart decisions can pay off big in the long run. Stick with me, and by the end of this video, you'll have the tools you need to begin your own journey to investing success. Ready to learn the secrets? Let's dive in. Chapter 1: The Value Investing Revolution. Why 2025 is the golden year. Investing can be daunting, especially for beginners. But 2025 might just be the perfect time to jump in, particularly with value investing. Why? The global economy has changed drastically in recent years. With technology booming and stock market corrections happening regularly, it's an ideal time for investors to grab undervalued stocks. As legendary investor Warren Buffett once said, "Be fearful when others are greedy and greedy when others are fearful." In 2025, many companies have fallen below their true value. The stock market's volatility, combined with the rise of new technologies, is creating opportunities for long-term growth. This means you can buy stocks at a discount and hold onto them for the long haul. According to recent studies, companies with strong fundamentals, like solid earnings and low debt, are thriving even in uncertain times. With patience, you can benefit from this undervalued market. Chapter 2: Decoding the Mystery. What is value investing really? Value investing is all about finding companies that are undervalued by the market. This means their stock price is lower than their intrinsic value. Think of it like shopping for a high-quality product that's on sale. You're not looking for the flashy, hyped-up items, you're looking for the ones with real worth, even if others haven't realized it yet. To put it simply, value investors aim to buy low and sell high. This strategy isn't about chasing the latest trends or hot stocks. It's about doing your homework and picking companies that are fundamentally strong but temporarily undervalued. A great example is how investors jumped on stocks like Apple and Amazon when they were in their early stages, before everyone else caught on. Chapter 3: Hidden Gems. How to spot undervalued stocks like a pro. So how do you spot these hidden gems? The key is understanding what makes a company valuable. First, you'll want to look at the PE ratio, price to earnings ratio. A low PE ratio could mean the stock is undervalued. But don't just stop there. Check the company's earnings growth. If earnings are growing but the stock price isn't keeping up, that's a clue. Also, consider the dividend yield. High dividends often indicate a stable, financially healthy company. One simple tool to use is a stock screener, which can filter companies based on these metrics. An example of a company that was once undervalued but is now a giant is Microsoft. Back in the early 2000s, Microsoft stock was considered cheap, but savvy investors saw its potential. Don't forget to subscribe. More insights are coming your way in the next chapters. Chapter 4: The Power of Patience. Why slow and steady wins the investment race. In value investing, patience is key. Unlike traders who are looking to make a quick buck, value investors take a long-term approach. They understand that the market is volatile and that short-term dips can be opportunities, not reasons to panic. Take the example of Warren Buffett's investment in Coca-Cola. He bought shares in the 1980s when the company was facing challenges, but he saw the long-term potential. Over time, his investment grew massively, and Coca-Cola became a key part of his portfolio. As Buffett famously said, the stock market is a device for transferring money from the impatient to the patient. In fact, according to a 2024 study by Morningstar, value stocks outperformed growth stocks over the past 20 years. That's because, while growth stocks might seem exciting, they often lack the solid fundamentals of value stocks. So, instead of rushing for quick returns, slow down, research, and focus on long-term growth. Chapter 5: Mistakes every beginner makes. How to avoid common value investing pitfalls. Even the smartest investors make mistakes. One common pitfall is chasing the crowd. Beginners often get caught up in popular stocks, thinking they'll make a quick profit. But value investing is the opposite. Don't follow the hype. Instead, focus on companies that the market might have overlooked, even if everyone else is rushing towards something shiny and new. Another mistake is ignoring fundamentals. Many beginners get excited about a stock because of a recent headline or a viral trend. But the truth is, a company's fundamentals, like its financial health, management, and earnings, are what really matter. As Benjamin Graham, the father of value investing, said, the investor's chief problem, and even his worst enemy, is likely to be himself. And don't forget the emotional roller coaster. The market can be unpredictable. When prices drop, it's easy to panic. But remember, value investing is about buying low and holding until the stock's true value is recognized. Stick to your plan and don't let emotions drive your decisions. Chapter 6, 2025 Trends. What to watch for when picking your first value stocks. Looking ahead, what sectors should beginners focus on in 2025? One trend that's hard to ignore is renewable energy. With climate change becoming a bigger issue, governments and companies are investing heavily in green technologies. Stocks in solar, wind, and electric vehicle companies are expected to grow, but some of these stocks are still underpriced. Another emerging trend is artificial intelligence, AI. Many AI companies are still flying under the radar, but as the technology becomes more mainstream, their stock prices are likely to rise. If you can identify these undervalued companies now, you could see significant returns in the coming years. Healthcare is also a solid sector to watch. With an aging population, companies that provide essential services and products will continue to thrive. For instance, companies in pharmaceuticals, medical devices, and healthcare management are expected to grow steadily, but some are still trading at prices below their true value. To get started, focus on industries that align with global trends and consider how these trends might evolve over the next decade. By doing this, you'll not only spot undervalued stocks but also position yourself to capitalize on future growth. Don't forget to subscribe and hit the notification bell, so you never miss more valuable investing tips like these. Conclusion: investing in 2025 is full of opportunity, but it's crucial to approach it with the right mindset. Value investing isn't about rushing for quick profits, it's about doing your research, being patient, and sticking to a strategy that has stood the test of time. Remember, in the world of investing, slow and steady really does win the race. By focusing on undervalued stocks and holding them for the long term, you can set yourself up for success in 2025 and beyond.